Hello everyone and welcome back to another session. So today we are going to discuss the questions of chapter Charge of GST. So not wasting any time and starting the questions. So question 1 says Panini Private Limited of Jaipur agrees to sponsor a sports event organized by Pink City Club, a non-body corporate in Jaipur. So here the supplier is a body corporate and the receiver is a non-body corporate. In case of sponsorship services, if the receiver is a body corporate or a partnership firm, then the said services will be taxable under RCM and not under FCM. So the question further says that Panini Private Limited has paid an amount of 5 lakh for such sponsorships of sports event. Consequently, the said event was named after the brand name of Panini Private Limited. This information for now is irrelevant. Okay. If this was supply chapter, then in that case, this would be considered as supply. Okay. Since it is for the brand name. So it is a question of quid pro quo. So here we have to examine who is a person liable to pay tax in the given case. So in this case, Pink City Club will be liable to pay tax under RCM. Why? Because Pink City Club is a non-body corporate. So a body corporate is providing sponsorship services, and when sponsorship services are being provided to a non-body corporate or to a partnership firm, then the same is taxable under reverse charge mechanism. So let's see the answer. So as I have discussed, see the notification is amended and it says that sponsorship services provided by any person other than body corporate to a body corporate or a partnership firm. Okay, so you have to remember this. Sponsorship services provided by any person other than body corporate to a body corporate or a partnership firm in a taxable territory shall be liable to GST under reverse charge in the hands of recipient. So in the present case, Pink City Club is a supplier who is receiving consideration of 5 lakhs from Panini Private Limited against provision of sponsorship services. So here, since the recipient of sponsorship services Panini Private Limited is a body corporate, GST will be payable by the recipient under RCM. Okay. So next question. Arpan Singhania is an executive director in Narayan Limited, Haryana. The company paid him sitting fee amounting to rupees 25,000 for the month of January. Now, the sitting fee is not specifically covered under TDS of salary section. Okay. Further, salary was paid to Arpan Singhania amounting to rupees 1.5 lakhs for the month of January, on which TDS was deducted as per applicable provisions of income tax law. Tapasya and Associates, in which Arpan Singhania is a partner, supplied certain professional services to Narayana Limited in the month of January for an amount of 2 lakh. Discuss the person liable to pay GST in each of the services supplies. So here there are three supplies. First one is that Arpan Singhania has provided services to Narayana Limited in the capacity of a director. Then the second service is second supply here is the salary paid, which is specifically out of supply as exempt. Okay, so this second supply of rupees 1.5 lakh will be considered as exempt. And the uh, third one is this Tapasya and Associates is supplying professional services to Narayana Limited amounting to rupees 2 lakhs. So a body corporate is providing the services to another body corporate for amount of 2 lakhs that will be taxable. See, so the first supply sitting fee paid to a director. So as per RCM, if tax on services supplied by a director of a company or a body corporate to the said company or body corporate located in a taxable territory is payable under RCM. So here the company will be paying tax on RCM for the services provided by the director. Okay. So the amount of 25,000 payable to Arpan Singhania by Narayan Limited is liable to GST under RCM. So the recipient of services Narayana Limited will be paying GST on the same. Now we have the second supply, that is salary paid to director. So as per this circular, director's remuneration which is declared as salary in the books of company subject to TDS under section 192. So the important point to remember here is that it is subject to TDS under section 192 and the TDS is being paid. So in this case, this transaction will not be taxable and it will come under the negative list of schedule 3. So salary received by Arpan Singhania of 1.5 lakh rupees is not liable to GST. Now the third and last transaction of this was that services provided by Tapasya Associates to Narayana Associates. Okay. So since Tapasya Associates is a body corporate providing services to Narayan Limited, another body corporate. Here, the fact that Arpan Singhania is a partner in Tapasya and Associates and is a director of Narayan Limited is not having any impact on the taxability of this transaction. So that is irrelevant for this one. Okay. So the professional services provided by Tapasya Limited to Narayana Limited are liable to GST and the forward charge, and so Tapasya and Associates will be liable to pay GST on the same. Now moving to question number 3. Mr. Rajbir, a registered person at Delhi, is in the business of selling goods relating to interior decoration under the firm name Miss MS Rajbir and Sons. He has opted for composition scheme in the financial year 23-24. Now his current financial year is 80 lakhs and it is expected to achieve 130 lakhs in the financial year 24-25. So we have to discuss whether Miss MS Rajbir and Sons can still enjoy the benefits of composition levy. So here we will have to check the conditions for composition levy if they are being met or not, or if they are being violated. Now the second part. His son Karan wants to start business of providing services relating to wait. Okay. His son Karan wants to start services of providing services relating to interior decoration after completing post-graduation course in interior decoration under the same firm name MS Rajbir and Sons with effect from 1st of April. So here, since Mr. Karan will be joining, so they'll have to consider it as a partnership firm and they will have to re-register it. And he wants to enjoy the benefits of composition scheme. So we will have to again check for the partnership firm whether the conditions have been met or not. So coming to the answer, C. As per section 10, a registered person whose aggregate turnover in the preceding financial year, remember the word preceding financial year, did not exceed 1.5 crore in a state or union territory may opt for composition scheme provided, so see what are the conditions, that he is inter alia engaged in supply of goods and or restaurant services. So the turnover should not exceed 1.5 crore and the person should be engaged in supply of goods and or restaurant services only. But however, and one more thing you are allowed along with opting for composition scheme is that if you are permitted to supply services other than restaurant services, the value should not be exceeding 10%. The value should not be exceeding 10% of turnover in your state or union territory in the preceding financial year or rupees 5 lakh, whichever is higher. So a value either 10% of your turnover or rupees 5 lakh, whichever is higher, for that much value you can provide supply of any other services other than your restaurant services in case you are opting for composition scheme. So in the given case, MS Rajbir and Sons, they are engaged in business of selling goods relating to interior decoration. So it is liable for composition scheme since the aggregate turnover is only rupees 80 lakh, which is be within the limit of 1.5 crore. Now, the second part wherein it was said that Mr. Karan wants to join. So if Karan wishes to start the business of providing services under the firm name, the sole proprietorship now needs to be converted into a partnership firm. And when your composition of your entity is changing, so in that case you need to take new registration and your new PAN number will be issued for this. Now, in that case, the firm can provide services relating to interior decoration up to a value of rupees 5 lakh. Why rupees 5 lakh? Because this firm will be having zero turnover in last year. So, 10% of 0 comes to 0 and your 5 lakh, whichever is higher. So, my higher limit is 5 lakh. So, up to rupees 5 lakhs, you can provide the interior decoration services. Okay. I hope this is clear. Now moving on to the next question. Varun and Arun Associates started a partnership firm of architects in Bhopal, Madhya Pradesh on 1st of April of the current financial year. The firm provides architectural services in Madhya Pradesh only and it has provided the details of turnovers for the current financial year. So see, we can see that in the quarter April to June, the turnover is 20 lakhs. In the quarter July to September, the turnover is 30 lakhs. And for the quarter October to December, the turnover is 20 lakhs. Now, the firm has obtained registration under Section 22 with effect from 1st of July. Okay. So for Section 22, the threshold limit is 20 lakhs. So 20 lakhs limit is being crossed in June. So from 1st of July, they have applied for registration under composition scheme. Okay, fine. Now determine the tax liability of Varun and Arun Associates for the quarters April to June. See, for the quarter April to June, since they were not registered, so they are not liable for taxability. And then for the quarters July to September and for quarters October to December. So let's see. See, first of all, we will have to check the conditions for composition scheme. Okay. So the composition scheme under subsection 1 and 2 of section 10 is available in case of goods and restaurant services. First point. Then you have to say the marginal services. Okay. So marginal services you can provide up to 10% of your turnover of the preceding year or rupees 5 lakh, whichever is higher. Okay. So see, Varun and Arun Associates is exclusively supplying services other than restaurant services. So it will not be eligible to pay tax under subsection 1 and 2 of section 10. But for those people who are not able to pay tax under subsection 1 and 2 of section 10, they have one more section, that is your section number 10 2A. So what does your section 2A says? It says that you can provide an option to a registered person who is not eligible to pay tax under subsection 1 and 2 of section 10. So what option is being provided? That they can pay tax at 6%, that is 3% CGST and 3% SGST or UTGST, provided the aggregate turnover in the preceding financial year is up to rupees 50 lakhs. So in case your turnover in the preceding financial year is up to rupees 50 lakh, you are still eligible to go for composition scheme in section number 2A if you are providing if you are into providing exclusively supplying services other than your restaurant services. Okay, so the said person can pay tax under composition scheme subject to specified conditions. Okay, so you have to check those specific conditions. Now see, in this case, Varun and Arun Associates have started supplying the services in financial year 2022-23. So the turnover for the financial year 22-23 is nil. Now it is eligible to avail the benefit of composition scheme. So see, up to 50 lakhs the turnover should be there. Since the turnover is nil, this condition is being satisfied for applying for composition scheme under section 2 Now it will become eligible for registration when the aggregate turnover is exceeding 20 lakhs. This we have already seen. Okay. So for determining the turnover, see, for determining the turnover, we will check, we will also take into the consideration only the turnover for which from the date on which you are liable to be registered and registration is being taken. See, for determining its turnover of the state for payment of tax. So to determine the turnover for payment of tax. Okay, this you have to remember, it is for payment of tax. For the quarter April to June, 20 lakhs shall be excluded as the values of supplies from first day of April of a financial year up to the date when such person becomes liable for registration are to be excluded. So when you will be calculating the tax liability, you will exclude the amount of turnover up to the date of your registration. So on the next 30 lakhs, that is your turnover of July and September quarter, it shall pay tax at the rate of 6%, that is your 3% GST and 3% SGST, which amounts to rupees 90,000 each. Now, by the end of quarter July to September, the aggregate turnover reaches rupees 50 lakhs. So now the person is ineligible for the composition scheme under section 10(2)(a). Okay. So consequently, its option to avail composition scheme under section 10(2)(a) shall lapse by the end of July-September quarter, and therefore it is required to pay tax under the normal scheme. So now from the quarter October to December, that is the turnover of rupees 20 lakhs, he will be liable to pay taxes at normal rates, that is 9% of SGST and 9% of CGST, which comes to rupees 1,80,000 each. The important point to remember here is this one, that while computing your aggregate turnover to determine the eligibility to pay tax, you will take the entire value of supply, but for calculating the liability of tax, you will deduct the amount of turnover which was there up to the date of your registration. Okay, this is an important point to note here and remember. So now moving on to question number 5. Examine whether the suppliers are eligible for composition levy under section 10 in the following independent cases. Okay, see, the question is specifically saying these are independent cases, so don't take information of one case to another case. Please remember. First one, A. Technology Enterprises registered in Jalandhar, Punjab is engaged in manufacturing and supplying computer systems. Its aggregate turnover in the financial year 23-24 is 125 lakhs. Now, Technology Enterprises supplies computer systems manufactured by it within the state of Punjab only. With a view to expand its business operations, it will start providing repairing services of computer systems in Punjab. Okay, so we have to see whether it is eligible for composition scheme. So we will check for section 10(1) and 2. If those conditions are not meeting, then we will check for section 10(2)(a). So for such kind of questions, what you have to do, you have to first write down all the applicable provisions. Okay, see what they have done. So as per section 10(1), following registered persons whose aggregate turnover in preceding financial year did not exceed 1.5 crore shall opt for composition levy. So you have to mention the conditions, that they should either be manufacturers or they should be persons engaged in making supplies referred to in clause B of para 6 of schedule 2, that is restaurant services and any other supplies eligible for composition levy. So first we will write down the conditions of section 10(1) and 2, and then we will write the conditions for section 10(2)(a). In these three sections, you can be registered for composition scheme. You can apply for composition scheme. Okay. So the composition scheme under subsection 1 and 2 of section 10 can be essentially availed in respect of goods and only one service, that is a restaurant service. However, the scheme permits, see this condition also you have to write, that marginal services can be supplied for a value up to 10% of turnover in the preceding year or rupees 5 lakh, whichever is higher. Okay. But then the condition is that the registered person should not be engaged in making any interstate outward supplies of goods or services. Then further you have one more section, section 2(a), under which, so say if you are not eligible under section 10(1) and 10(2) of paying tax at 6%, then You can pay under section 10 2A at 6% provided your previous financial year turnover should not exceed rupees 50 lakhs in aggregate. Okay, so these two conditions you have to mention. Now in the first case the person is for the state of Jalandhar, Punjab, and it is not exceeding 1.5 crore, so your section number 1 and 2 are applicable, and it is also making intrastate supplies. Okay, so that is also okay for your composition scheme. Now further, since the registered person opting for composition scheme can also supply services other than restaurant services for a value up to 10% or rupees 5 lakh, whichever is higher. So here technology enterprises can give repair services up to a value of 10% of 125 lakhs comes to rupees 12.5 lakh or rupees 5 lakh, whichever is higher. So your 12.5 lakh is higher. So technology enterprises can supply repair services up to a value of rupees 12.5 lakhs in the financial year 24-25. Then B says Mr. Siddharth and Sons registered in Delhi owns a restaurant, okay, and the turnover is 112 lakhs in the financial year 23-24. In the view of growing customer demand, it will also start intrastate trading of juices. Intrastate trading of juices they are talking. So what will happen here? See, since the turnover is 112 lakhs, so they are eligible for registering under section 10 1A and 10 2. Okay, so it is a case of Delhi. So they are eligible for parts 1 and 2. And the supplier is engaged in providing restaurant services, that is eligible under composition scheme, and they want to engage in trading of goods. See, the condition of additional 10% of turnover of rupees 5 lakhs is specifically for supply of services. So you have to remember that point over here. Okay. So MS Siddharth and Sons is eligible for composition scheme under subsection 1 and 2 of section 10 from the financial year 24-25. Then the third case, Sitaram Associates registered in Sikkim. So Sikkim has a different turnover limit. Okay. For Sikkim, the turnover limit is rupees 75 lakhs. Now it is having turnover of rupees 73 lakhs, which is within the limit of 75 lakhs. Now, in the financial year 24-25, it decides to shut down the food chain owing to huge losses being incurred in the said business. Instead, it will start providing intrastate architect services from the financial year 24-25. So, you have to see for the financial year 23-24, the services are allowed. Okay, see. See, so the limit for Sikkim is rupees 75 lakhs in the preceding financial year, and they are exclusively engaged in supplying services other than restaurant services, so they are not eligible for the said composition scheme. Okay, so here we will check section 10(2)(a), and in section 10(2)(a), your limit is rupees 50 lakh, which is again breached, so this case is not eligible for section 10(2)(a) also. Okay, so since it is not eligible for section for your section 10 1 and 2 and your section 10 2A, so it cannot go for composition scheme. Then the last part in this, Deepti Services Limited registered in Uttarakhand. Again for Uttarakhand, the limit is 75 lakhs. Okay, and it has turnover of 34 lakhs. So what happens in this case? It has limit of 75 lakhs and it is exclusively in styling services, which is other than your restaurant services. So the eligibility for section 10 1 and 2 is not there. So we will check the eligibility for section 10 2A. Now in section 10 2A, the turnover limit is below rupees 50 lakhs, which is eligible here. So Deepti services will be eligible for section 10 2A. See, A service provider can opt for the composition scheme under subsections 1 and 2 of section 10 only if he is engaged in supply of restaurant services, and in our case the services are styling services, so they are not eligible for this one. Okay, see, since Deepti Services Limited is exclusively engaged in supply of services other than restaurant services, it is not eligible for composition scheme under subsection 1 and 2 of section 10, even though its turnover is less than 75 lakhs. Okay, so the eligibility of turnover is being met, but the eligibility of the kind of services being provided is not met. However, since Deepti Services Limited is not eligible to opt for composition scheme under subsection 1 and 2, so we will check subsection 10 2A. Okay, so that aggregate turnover in financial year 23-24 is not exceeding rupees 50 lakhs, so it is eligible under section 10 2A in the financial year 24-25. Now, the answer will remain same even if Deepti Services also starts supplying beauty products along with providing hairstyling services in the financial year, since the condition is being fulfilled. Okay, the condition for providing any other services is for services and not for goods. So goods you can provide, that is not an issue. The only condition you need to check is your turnover limit of rupees 50 lakhs in that case. Okay, moving on to question number 6. Okay, so question 6 says B&D company, a partnership firm in Nagpur, Maharashtra, is a wholesaler of a taxable product. So it is providing a taxable product P and a Q product which is exempt by way of notification. Now the firm supplies these products only in eastern part of Maharashtra. All the procurements, both goods and services of the firm, are from the suppliers registered under regular scheme, and the firm pays tax under composition scheme. So one of the conditions for composition scheme is that you should be taking all your supplies from registered people. Okay. So turnover for the quarter ended June is given, and turnover for the quarter ended September is given for both product P. Product P is your taxable product, product Q is your exempt product. Now you are given the bill book maintained for the month of October. So you are given the dates and you are given the value of products exclusive of taxes provided for products P and products Q. Next, you are said that they have paid freight of rupees 1,40,000 to goods transport agency during the month of April to October. So this 1,40,000 is being paid for the months of April to October, April, May, June, July, August, September, October. This comes to 7 months. Okay, and equal amount is paid on the 10th day of each month. Also assume that the goods for which freight is paid on 10th day are transported between 11th to 28th of the month. So freight is paid on 10th and transportation happens after freight is paid. Now you have to compute the GST liability of B&D company for the period of April to October under composition scheme under subsection 1 and 2 of section 10, showing calculations of each quarter separately. So we have to check in each quarter what is the tax liability. So see, first we will check whether the person is eligible for a composition scheme under section 10 1 and 2. Okay, so see, the option availed by registered person to pay tax under composition scheme under subsections 1 and 2 of section 10 shall lapse with effect from the day on which the aggregate turnover during a financial year exceeds rupees 1.5 crores and rupees 75 lakhs in case of special category states except Assam, Himachal Pradesh and Jammu Kashmir. Okay. So see, as per section 26 aggregate turnover, you have to mention what all will come in your aggregate turnover. So your aggregate turnover will include all the values of your taxable supplies, your exempt supplies, your exports of goods or services or both, and your interstate supplies of persons having the same PAN number, to be computed on all India basis, but it excludes your tax components. Okay. So your all your GST, SGST, IGST and GST composition sales amounts will be excluded from your turnover. Now in the given case, the firm is registered under composition scheme in the state of Maharashtra. So the applicable limit is 1.5 crores. Now this limit is exceeding on 3rd of October. Okay. So from 3rd of October, the person will be liable to go for normal scheme. See, they have calculated the turnover. Okay. So the turnover is exceeding on 3rd of October. See how this is calculated. See, your turnover for till the month of June and till the month of September 60 lakhs plus 50 lakhs plus 1765 plus 17. Here you will take both your taxable and your exempt supplies, plus you will add up this total supplies of 1st October, 1st October, 2nd October and 3rd October, and on adding the 3rd October's amount, your limit is being breached. See, okay, so the moment you add the turnover for your 3rd October, your limit is exceeding your 1.5 crore limit. So from 3rd October, you will be liable for normal scheme and you will have to opt out from the composition scheme. Now, the inward supplies of goods transportation services in respect of which the firm has to pay tax under reverse charge has not been included in aggregate turnover. Okay, why it is not included? Because you have to pay tax under your reverse charge. Okay, the tax is payable under reverse charge on such services as applicable rate on tax on which services given as 5%. Okay, so why it is reverse charge? Because we are given that for GTK we have to pay tax at 5%. In case the company was paying at 12%, that would be under FCM, and in that case you will be including that amount also in seeing your this overall turnover limit. Okay, now the firm will have to pay tax under regular scheme from 3rd of October. Fine. Now calculation of your output tax liability. Okay, so see, since you are opting for composition scheme from 1st April to 2nd October, you will not have any ITC. Okay, ITC will not be available. Now see how this calculation is done. So for the quarter ended 30th June, we will only calculate for P. Why? Because P is only providing taxable services. For Q, the supplies are exempt. So we will not do the tax calculation. So up to 30th June, the turnover was 60 lakhs. Up to 30th September, it was 50 lakhs. And for quarter ended 31st December, your total turnover is this much. And you will calculate your GST at the rate of 0.5% because it is a composition scheme. And for inward supplies, you have to calculate for RCM. See here, you have to remember the months calculation. We already saw that it was from April to October, which is 7 months. And since you are calculating for one quarter, it is comprising of 3 months. So 1,40,000 into 3 divided by 7. Okay, so this you will calculate. And for October month, you have to see that see on the 10th of the day, the goods are being transported between 11 and 20. Okay, so this will be assessed under your regular scheme. Okay, so for your composition scheme, you have to calculate this GST at 2.5%. Why 2.5%? Because it is 5% RCM rate. Okay, and then you have to see your total GST liability comes to be 31,500 for the quarter ended June, 26,500 for the quarter ended September, and 2015 for the quarter ended December. So your total GST payable will be 31,500 plus 26,500 plus 2015, which comes to 60,015. Okay, same way you have to calculate your SGST liability also. Now moving to the seventh question. Shubhalakshmi Foods is engaged in supplying restaurant services in Maharashtra. In the financial year 23-24, it had a turnover of 140 lakhs from the restaurant services. Further, It earned the bank interest of rupees 20 lakhs from fixed deposits in the said financial year. So we have to check whether it is eligible for composition scheme or not. So see the turnover here, what you have to remember is that the amount of bank interest is not to be taken while seeing the overall limit of turnover for composition scheme. Again the same point you have to remember in the next part of this question. Further, assuming that in the financial year 24-25 its turnover is rupees 130 lakhs and from the supply of restaurant services and rupees 10 lakhs from the supply of farm labor. So here again your total turnover for checking the eligibility of composition scheme will be rupees 140 lakhs, comprising of your 130 lakhs and your rupees 10 lakhs. Okay. You will not include the bank interest of rupees 30 lakhs for checking these composition levy limit. Okay, so let's check the answer. See, as per section 10(1) and notification 14/2019, a registered person whose aggregate turnover in the preceding financial year did not exceed rupees 1.5 crore may opt to, in lieu of tax payable by him, an amount calculated at the specified rates if he is not engaged in supply of services other than restaurant services. And you are supposed to provide a marginal services up to a limit of 10% of your turnover in the preceding year, or rupees 5 lakh, whichever is higher. Okay. So see, in this case, now this you have to remember. Okay, this is the crux in this question. Although exempt services are included in determining the value of turnover, so see, for calculating the value of turnover, we are also including the value of exempt supplies. But your section 10(1) clarifies that for the purposes of second provision to section 10(1), the value of exempt supply of services provided by way of extending deposits, loans, or advances, the value of exempt supply of services provided by extending deposits, loans, or advances, insofar as the consideration is represented by way of interest or discount, shall not be taken into account for determining the value of turnover in a state or union territory. This point is extremely important, remember. Okay. So, in this case, as I said, for the financial year 23-24, the turnover is rupees 140 lakhs, which is within your limit of 1.5 crore. Okay, and you don't have to include the interest amount of 20 lakhs. So, it is eligible for a composition scheme under subsection 1 and 2 for the year 24-25. Again, again we will see, and then see, we have to check that for other services, for marginal services, it was 10% of your turnover or 5 lakh, whichever is higher, which comes to rupees 14 lakhs in this case. So the and again for this also we are not taking into consideration this bank interest of rupees 20 lakhs. So this is eligible. Okay. Now for the year 24-25 also, your turnover was 1,30,000 and your turnover was rupees 10 lakhs from farm labor, which amounts to rupees 1,40,000. Again here the eligibility conditions are being met. So you will be paying tax at 5%, 5% of 1,40,000. Again for this purpose also you are not supposed to include the bank interest amount. Okay, this is the point to be remembered over here. Now the next question. Question number 8. Bansal and Chandyok started a partnership firm on 1st April in the current financial year. The firm specializes in providing audit services to banks in Rajasthan, and it has provided you the turnover limits for the quarter April to June is 10 lakhs and for the quarter July to September it is 20 lakhs. Now it says that it crosses the threshold limit of 20 lakhs on 1st of August. Bansal and Chandyok wishes to opt to pay tax at concessional rate under section 10(2)(a), examine whether the firm is eligible. So for section 10 2A, the applicable limit is rupees 50 lakhs. Okay. So let's check. See, the composition scheme under subsection 1 and 2 1 and 2 of section 10 is available in case of goods and restaurant service only, but here we have seen that this is not exclusively some other service. Okay, so we will have to check the condition of section 2A. Further, marginal services provided up to specified limit can be provided along with the supply of goods or restaurant service as the case may be. Okay, so since they are providing services other than restaurant services, so they are not eligible for section 10 1 and 2. So we'll check section 10 2A. Okay. So, section 10 2A provides that a registered person who is not eligible to pay tax under subsection 1 and 2 of section 10 of paying tax at 6% provided his aggregate turnover in the financial year is up to rupees 50 lakhs. So, this person can pay tax at 6%. So, let us check the turnover limits. Okay. So, see, Bansal and Chandyok has started supply of services in financial year 23-24. And the turnover for 22-23 will be nil. So in 23-24 they are eligible. Okay, they are eligible for composition scheme of section 10(2)(3). Now it becomes liable to registration when its aggregate turnover exceeds rupees 20 lakhs. So while registering under GST, it has to pay tax under composition scheme of section 10(2)(a). So for the April-June quarter, since the tax payable by firm will be nil. Why? Because the firm's turnover is rupees 10 lakh, which has not exceeded the threshold limit of rupees 20 lakh. Okay. And for the quarter July to September, that is your second quarter, from 1st April to the date from which he becomes liable to registration. See here, the important point to be remembered is up to the date of your registration, whatever your turnover is, you will not include that turnover. Okay. So your total turnover is rupees 30 lakhs, but your threshold limit is rupees 20 lakhs, which we will be excluding here. Okay. So your taxable turnover will be rupees 10 lakhs. On 10 lakh rupees, you will be paying tax under composition scheme section 10(2)(a, which is 6%, and the amount comes to rupees 60,000. Okay, which is 30,000 comprising of 30,000 of CGST and 30,000 of your SGST amount. Now moving on to question number 9. Okay. Mr. Prem is running a restaurant in New Delhi, and in financial year 23-24 it has aggregate turnover of rupees 120 lakhs from restaurant services. Okay. So for New Delhi you have to check the limit of 1.5 crores. Okay, and the services are restaurant services. So eligibility of section 10 1 and 2 is being eligible here. It is being met. Okay. Now in the financial year 24-25, apart from restaurant services, he also wants to provide food delivery services, which is estimated up to 5 lakhs. So you have to check 120 lakhs rupees, 10% of 120 lakhs comes to 12 lakhs or 5 lakhs, whichever is higher. So up to rupees 12 lakhs, he can provide other services. Okay, let's check. See, as per section 10(1), a registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crore may opt to pay in lieu of tax payable by him an amount calculated at specified rates if he is not engaged in supply of services other than restaurant services. So this condition is met. However, the scheme permits supply of other marginal services. So for other marginal services up to a value of 10% of the turnover in the preceding year or rupees 5 lakh, whichever is higher. So in this case, the aggregate turnover of Mr. Prem was 120 lakhs in the financial year 23-24, which is not exceeding your 1.5 crore limits. So he is eligible for composition scheme. And further, he can also provide services other than restaurant services for a value of up to rupees 12 lakhs, okay, being the higher of 10% of 120 lakhs or 5 lakhs. So till his turnover from food delivery services is not exceeding rupees 12 lakh, he is eligible for the composition scheme. Now the next question, question number 10. MS Hiralal and Sons registered in Karnataka has opted to avail the benefit of composition scheme under subsection 1 and 2 of section 10 from 1st of April 2025, and it has given the details of the quarter ended 30th June. So taxable turnover of goods within the state is rupees 15 lakhs, and exempted turnover is your rupees 72 lakhs, and total turnover is 32 lakhs. So using the above information, calculate the tax to be paid by the firm for quarter ended on 30th June in following independent situations. Okay, so you have to calculate if MS Hiralal and Sons is a manufacturer and if he is a trader. The point to be remembered here is that for a manufacturer, you have to calculate your tax on total turnover, which includes your exempt turnover also. And in case of trader, you will be paying taxes only on your taxable portion. You will exclude the exempt portion. See, so computation, if MS Hiralal and Sons is a manufacturer, so in case of manufacturer, we will be paying the tax on total turnover, that is 1% of 32 lakhs, which includes your exempt turnover of 17 lakhs also. Okay. And if he is a trader, we will be paying only on 15 lakhs and not on, we will be excluding the exempt turnover here in this case. This is the only point that you need to remember for this. Okay. Question number 11. MS All-in-One, a partnership concern and a registered supplier under GST, is engaged in providing various services under one roof. It is engaged in paying tax under regular scheme, and we are given certain supplies and input services availed by it during the month of March. The first one is provided direct selling agent services to Y Bank Limited 4 lakhs. Then we have security services. Okay. So for security services, it is provided to ABC Limited. It is provided to a body corporate who is a registered person. So in case you are providing security services to a registered person, the same will be payable by the registered person under FCM. And in case you are providing security services to a unregistered person, you will be liable to pay taxes under RCM. Then providing renting of motor vehicle to a body corporate. See, Amaze Tools Limited is a body corporate. So here, Amaze Tools Limited will be paying tax on the same under FCM. And then you are providing to Preeti and Company, okay, renting of motor vehicle service for transportation and the value of so in this case, since this is a CA firm, see, you have to check what is the status of the entity. So since this is a partnership firm, this will be under ICAI payable by us, and avail representational service. Now representational services from a law firm. Okay, so it is again not from a body corporate, so again this service will be exempt. So let us check the tax liabilities. See, for direct selling agent service to Y Bank Limited, tax is payable under forward charge. Why forward charge? Because supplier of service is a partnership firm and not an individual. So since the supplier is a partnership firm, we will be paying under forward charge. So forward charge you have to calculate at 9%. Tax rates are already given. For security services to ABC Private Limited, it is provided to a body corporate person. Okay, is payable under RCM by the recipient since supply services are provided by non-body corporate to a registered person. So here the thing that you have to check is whether it is being paid to a registered person or a non-registered. If it is paid to a registered, it will be under RCM by the recipient, so we are not liable for any taxes. Now in this case we are providing to a unregistered person, so we have to pay under forward charges. Then renting of motor vehicles to Amaze Tours to Amaze Tours Limited, where value is including cost of fuel. Here, tax is payable under RCM since services are provided by non-body corporate to a body corporate. Okay. And in the second case, we are providing to a firm. Firm is not included in a body corporate. So since the services are being provided to a non-body corporate, we will be paying under FCM. So your total GST liability terms are to be 46,000, comprising of your direct selling services, then your security services to an unregistered person, and your renting of services to a non-body corporate. Okay. Then for inward supplies, we have this representational services. The point to remember here is that these services are provided by a partnership firm of advocates or individual advocate other than a senior advocate. So other than senior advocate, if the legal services are provided, they are exempt from registration. Okay. So since they are exempt, there will be no tax liability for this services, and there is no GST liability on any inward supplies under RCM. Now next question. Amen Limited has two registered places of business in the state of Haryana. Its aggregate turnover was rupees 62 lakhs. For Haryana, the limit is 75 lakhs. Okay. Now it wishes to opt for composition levy under scheme under subsection 1 and 2 of section 10 for one of the places of business in the financial year 24-25 and wants to continue with registration under normal scheme and pay taxes at normal rate for other places of business. See, one of the conditions for composition scheme is that if you are opting for composition from one registered place of business, then you will have to opt for composition scheme over all the registered places of business under the same registration number. Okay. So both the places are having same PAN number. So since the both places are having same PAN number, so you need to either opt for registration under composition scheme for all, or you need to opt for the normal scheme under all. You cannot have one as composition and one as your normal registration. So let's check the answer. See, as per provision to section 10(2), where more than one registered persons are having the same PAN number issued under the Income Tax Act, then the registered person shall not be eligible to opt for composition scheme under section 10(1) unless all such registered persons opt to pay tax under the same composition scheme. Okay, so this you have to remember. In the given case, since Amen Limited has two places of supply, they are not separate entities under Income Tax Act. Okay, since they are having the same PAN number, they are the same entities for Income Tax Act. So they would be registered under the same PAN, and therefore Amen Limited cannot opt for composition levy only on one place of business and pay tax under regular scheme for other place. So to be eligible for composition scheme, it will have to opt for composition scheme under all the businesses. Okay. So coming to question number 13, what it says. Ranveer Industries registered in Himachal Pradesh is engaged in making interstate supplies of ready-made garments. Okay. So the threshold limit for Himachal Pradesh is of 75 lakhs turnover. The aggregate turnover of Ranveer Industries in the financial year 23-24 is 70 lakhs. It has opted for composition levy under subsection 1 and 2 of section 10 in the financial year 24-25 and paid tax for the April-June quarter of financial year 24-25 under composition scheme. The proper officer has levied penalty for wrongly availing the scheme on Ranveer Industries in addition to the tax payable. Examine the validity of the action taken. So what is happening that the turnover is 70 lakhs, okay, and the assessee Ranveer Industries has registered in section 1 and 2 of section 10 and paid tax under composition scheme. A proper officer has levied penalty for wrongly availing the scheme. Now we have to examine whether the action taken by the proper officer is valid or not. So here the key thing that you need to remember is that one of the conditions for availing composition scheme is that the assessee should not be making any interstate supplies, and here Ranveer Industries is making interstate supplies. Okay, so this is a violation of one of the conditions for availing composition scheme. So in this case the composition scheme is invalid, so the proper officer has levied penalty. So again you will have to check the reasons for the same as per your section 73, 74 or 74A, whichever is applicable. So let's go through the answer. See what the answer says. As per section 10(1), a registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crore in a state, union territory or rupees 75 lakhs in special category states except Assam, Himachal Pradesh and Jammu Kashmir may opt for composition scheme. So since we are talking about Himachal Pradesh, the applicable limit is 75 lakhs and the turnover is well within the limits, so no issues in that. But he shall not be eligible to opt for composition scheme. Why? Because he is engaged in making interstate outward supplies of goods and services. So in the given case, Ranveer Industries is engaged in making interstate supplies of ready-made garments and it is not eligible for the composition scheme. And so though it is not exceeding the threshold limit of 75 lakhs, okay. So further, if the proper officer has reasons to believe that a taxable person has paid tax in the composition scheme despite not being eligible, such persons shall, in addition to any tax payable, be liable to penalty, and the provisions of section 73, 74 or 74A shall apply for determination of tax and penalty. So thus the action taken by the proper officer of levying the penalty for wrongly availing the composition scheme is valid in law. Now moving on to question number 14, that is your last question for the chapter. So what does question 14 says? Mr. Yash, doing business in the state of Kerala, commenced his business in the month of April. Okay, and the further information is provided. So intrastate turnover, April-June quarter it says 20 lakhs. So since in June 20 lakhs is a turnover, you will be liable for registration from 1st of July. Okay, as you are crossing the threshold for registration. Now, in July-September quarter, the turnover is 100 lakhs. In each of the quarters, exempt supply made by him was 25%. So, out of these 20 lakhs, 25% is your exempt supply and 75% is your taxable supply. So, 15 lakhs will be your taxable supply and 5 lakhs will be your exempt supply. In case of for this 100 lakhs, 75 lakhs will be your taxable supply and 25 lakhs is your exempt supply. Now, since the product supplied by him was eligible for composition scheme, he opted for registration under composition scheme. So, from 1st July, he has obtained registration under composition scheme. You are required to compute the tax payable if he is a manufacturer and if he is a trader. So, in this case, the important thing that you need to remember is that in case of a manufacturer, the entire amount is leviable to tax, that is including your exempt supplies as well as your taxable supplies, and in case of trader only your taxable supplies tax will be levied. So as per rule 10 read with rule 7, a registered person opting for composition levy of goods pays tax at the rates mentioned below during the current financial year in lieu of the tax payable by him under regular scheme. So for manufacturers other than the manufacturers of notified case, it is 1% of the turnover in the state or union territory comprising of 0.5% CGST and 0.5% SGST or UTGST. And for traders, it is 1% of turnover of taxable supplies. The thing that you need to remember here is for traders, it is always taxable supplies, okay, and not total turnover. In case of manufacturers, it is taxable supplies plus exempt supplies. So see, for if Mr. Yash is a manufacturer, and why we have not taken any GST liability on 20 lakhs? Because till that time registration was not there, so there was no liability. Now registration has been done, so on rupees 100 lakhs, liability as a manufacturer will be 0.5% on entire 100 lakhs, and liability as a trader will be 0.5% only on the taxable portion, that is a 75 lakhs, which comes out to be 37,500 each CGST and SGST. And with this, our chapter gets completed. If you have any doubts or you need to provide me any feedbacks, you can comment below. Also, you can reach out to the Telegram channel. The link of the same is given in the description box. Hope you have a great study session. Happy studies. See you in the next session. Till then, take care. Learn well.